Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks again for having me.
Some people were wondering if the bump that we had earlier in the year was enough of the correction to keep the equity markets going higher and going higher for some long period of time. But what's your feeling on that?
Well, on the industrials, there are some structural violations that occurred that tells us that, there are some cracks. There are some definite indications that, there's a shift trying to take place. And that the price action since has been really a great levitation. Prices held up, the industrials, they made a lower low in April, and some of the other indexes made the corresponding low in February, but since then everything has been up. And, I've seen some cyclical evolution, if you will. I think that may have been a little bit higher degree low, but I do think that because of the violations that we've seen on the industrials and a couple of other indexes, that there is a shift taking place, and that what we're seeing is a major top in the making. Are we there yet? No, it's still in the making, but I think it's underway, and I think we're seeing the same thing in pretty much all the asset classes. Commodities have continued to hold up, but we're pushing into a 3-year cycle top there. That's still in the making. I mean, the cycle is very clear there, that there is a 3-year cycle low coming in ideally in late 18 to early 19. Gold, there has been some question about whether we had seen an early 9-year cycle low or if it was still ahead. Well, it was early. The structure with this last intermediate term cycle has pretty much proven that out. And we've talked about how that wasn't necessarily a good thing because of the weakness of the advance. I mean, I forget now how many months we are into this, 27, 28 months, something like that, into this 9-year cycle, and here we sit with a high that has occurred. I think it was in the 7th month of the advance following the 9-year cycle low back in December of 15. That's just not positive. So again, while the cycle count has changed a little bit, it's a levitation. And I think that's what's going on with all the asset classes here, since, I say all the asset classes with equity since February, and by and large with gold since the 2015 lows, just kind of hung out here and back and forth and really done nothing. And that we're setting up for, a massive decline in all asset classes. I think that's what we're facing. We talked about the surprise bottom in the dollar this year, and we've seen that, slowly but surely, that piece of the puzzle has come to play. The other pieces have not fallen yet.
What do you think will be the trigger point or the one thing that upsets the whole apple cart?
I don't know. I think maybe it just all eventually falls on its own weight. We looking at it from a technical perspective, the structure has to be in place. And that's what we have been, I choose my words here, but that's what we've been fighting, or the market has been fighting, whichever side of the fence you want to argue that on. I mean, it has tried to set up, and then it couldn't. We had the 4-year cycle top way back in 15, And, the market tried to set up back then, and then it just nothing ever really materialized. And we had the election, and we pushed up into that parabolic advance. And here we are again, finally, in the last, since, this year, since January, February, been trying to set up again. Does it materialize? Can it get a toehold? I've talked about this, kind of hate analogies because they're kind of corny, but it's literally like driving down the road and going to an intersection. You have the opportunity to turn, right? Turn left or go straight. And that's what's happened. We're at another one of those, junctures technically, and we have to be at that intersection. We have to have those technical pieces in place for the market to turn. And can it mend it again? And this extend on, and I don't know, maybe, or does it take hold, and the bigger shift turn? I don't know. None of us have that crystal ball, but the pieces are trying to fall in place again. And like I said, we do have some structural issues now on the industrials that's by and large unnoticed. We do have the 9-year cycle low in place in gold, and like I said, everybody is bullish about gold, but then they're not looking at, or they want to be bullish about gold, I should say, but then they're not looking at the fact that, okay, well, what's bullish about it having made the low in December of 15 and the top 7 months later, I think it was in July of 16. What's bullish about that? So we've had the poorest, again, the poorest 9-year cycle advance that I can point to, and here we are in the levitation. So the pieces are slowly falling into place for, I think, a monumental shift.
Is this a case of everything's going to happen in slow motion? It took a long time for the Dow to get this high. And is it going to be a slow process as it winds down, instead of what we usually see is just a rapid drop in the market where it falls like a brick off your balcony? Rather, in this case, it's going to be a sponge filling up with water and slowly floating down.
I don't really know, don't pretend to know, but my thinking is that it's like like I said, I hate to keep using the word, but the levitation is so heavy. It's built and built and built. The market is up. It's kind of like a house on stilts with, a poor foundation. It's built, and it's managed to hold. But then when it collapses, it collapses. And I tend to think that once the pieces, parts are all in place and the right structural domino falls, and then the reckoning comes, and people realize that, things aren't okay, or they're not as they seem, and obviously when the market is set up for bad things, then some skeletons usually surface and come out of the closet, and when it's set up for good things, then good news comes. But obviously there'll be something fundamentally come along that'll get the blame. But I think by and large, once it's set up, I think it rips. I think it goes.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see happening with the U.S. dollar?
Right now we're at what should be a short, and we even have an intermediate term top due. So, again, once we get, a short-term sell signal that evolves into an intermediate-term sell signal, I fully anticipate a correction of this advance. I mean, the dollar has been very, very strong, and there are some cycle lows coming up. I don't have that timing in front of me. I wasn't expecting you to ask me that question, but I think it's within the next month or so. We have intermediate degree low due. And from there, once we turn down, that correction is made, then I think the dollar moves much higher. I mean, we had a major clustering of lows in the dollar. And, even if that higher degree low is left translated, there should still be much more strength left in this 4-year cycle advance in the dollar. So I'm very bullish on the dollar.
So many currencies around the world are now in trouble. Argentina has a currency crisis. Venezuela is in a deep crisis. Pakistan plans to ask China to help them out right now. Italy's 5-star movement looks like it might form a coalition government, and they don't want to pay any government bills at all that are due. They want to start fresh and perhaps go back to using the lira. So does that leave the U.S. dollar as one of the few stable currencies out there, and what other choice would you have?
I don't know what other choice you do have, really. I mean, I understand the argument about the dollar being fiat currency. I mean, we all understand that, but it is what it is, and just looking at it cyclically, we had, like I said, a major bottom in the dollar. I don't follow a lot of other currencies, but in looking at the euro, which is kind of the inverse of the dollar, really, I guess, in many respects anyway. But the euro looks like it looks like the 4-year cycle top is definitely in place there. And then I had a subscriber ask me a question about the ZAR. I looked at it, and it looks like a major top there. But I don't look at a lot of other currencies other than, like I said, just the dollar, and I like what I see. But short and intermediate term, yes, I think that the dollar has been, that the move that we've seen, it needs to be corrected, and the timing is right for it. So I look for a little intermediate to short-term weakness.
We'll have more with Tim Cyclesman-Wood right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman-Wood. Tim, you had more to talk about the equities bubble and what might happen there?
Well, the one thing that I remember saying when we came out of the 09 low, I made the comment repeatedly. I said that the longer it lasts, the more convincing it would become. And man, I never imagined at the time, I don't think anybody did, that we would see, the biggest bubble in U.S. stock market history, I guess in global, history, all markets included, what I'm trying to say. And again, back in January, we saw the most, overbought, according to some technical, just a simple monthly RSI reading of the U.S. Dow Jones Industrial Average, and then a composite of U.S. stocks prior to that back to 1800. So the most overbought market, I got a little wordy on that, but the most overbought market in the U.S. since 1800. And then looking at some of the valuation methods and so forth by Hussman and others, well-respected guys that, just blown their models up as far as the degree of overvaluation, and they've been ridiculed and that sort of thing too in this bubble. And the point being that, everybody, they think that this extreme, because it's been going on for so long, that somehow it's normal, and it's not. and by no means is it normal. It's going to be corrected in a big way, and that statement that I made way back about the longer it lasts, the more convincing it would become, the more dangerous it would become, could never be more accurate. And what I mean by that is you think about this. The average person, they have their money in their 401k or the teacher retirement or whatever. Well, let's say that Tim and a few of these other old technicians, crazy technicians, are correct, and this really is a bubble, and it cracks 70 or 80%. What's your 401k going to look like? What's your teacher retirement going to look like? That's the danger. That's the danger. And no one understands that. And so that's what we face here. And, people can, I granted, look, it's held up far longer than any of I think probably your guests, anybody that any of the old school technicians that I know, masterful job at inflating this. I mean, who would have thought that we would have seen, the QE and the methods and the extent that they've gone to create the bubble that they've created. But you know what? I like the other comment I've made before. Point to one. Give me one example of one bubble in history that didn't collapse. And there's not one. And so this one is no different. The fact that it's maintained and held as well as it has, as long as it has, is a different story. Still a bubble. And the outcome is going to be no different. And like I said, looking at the juncture we're at here now, yes, there are cracks, and this could very well be the quiet before the storm. I don't know if it's going to take hold here, technically or not. We will see the indications if it does, and if it doesn't, we will obviously see that as well. But anyway, I'm rambling now, but that's the danger, and like I said, because it's held on so long, it feels normal. So, anyway.
With U.S. Treasuries returning 3%, would people be wise to go to them right now?
I think that once this thing does crack, that some form of cash, be it literally in cash or in Treasuries on the side, is going to be the only place to be. I mean, I think that holding any other asset class is going to be detrimental. Commodities bubble, not as big a bubble as they were in 2007-8. It's been a rebound bubble, but they're at a top. You look at I look at housing, at least in my area, and even looking at some of the housing index, the charts and so forth. It's the same thing. Everything's in the same boat, just to varying degrees. I see the bubbles in collectible stuff, in vintage stereo equipment, for Christ's sake, and vintage watches. It's everywhere. It's everywhere. And it's all going to come down together, just like it always does.
Well, I mean, we saw the Japanese in the 80s buy everything, and then everything in Japan didn't just go sideways. It fell like a rock. And only recently have they recovered back to what they had back in the 80s. China now buying everything they can because perhaps they don't trust their own stock market.
Right. And here's another thinking on the gold thing. What I was hoping, really, because I wanted to be able, personally to give people, you have a notion or whatever, something to look forward to. And one of the things out there are safe havens was gold. And what I was thinking we were setting up for, with the 9-year cycle low, or kind of holding out on, was that, as everything else went to the hell in a handbasket, that we would have the 9-year cycle low formed in gold, and that gold would be a safe haven. But that has proven in the process of this, proving beyond a shadow of a doubt pretty much at this point that the 9-year cycle low was seen in gold in 2015, gold's not set up to be that safe haven now. All asset classes are setting up when this falls in place to pretty much collapse together, which is what they did in 2007, by the way.
What's your outlook on oil right now?
Again, it's held up much better than anticipated, but the longer term 3-year cycle is crystal clear, and it's pushing into a 3-year cycle top to peak along with everything else. Do we have that not 3-year cycle top in place yet? No. I can't point to the structure and say, yes, there's a crack there. But I can look at the cycle that is clear, and there's no doubt in my mind that oil is pushing into a significant cycle high, a clustering of highs, and that the whole entire commodity complex, gold, metals included, are going to turn down into lows along with equities, I think, later this year.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests, like Tim, can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.